Okay, I do want to do a disservice to anyone that was very prompt in joining. So thank you all so much for joining us today. Um, During this session, we will be talking to you about what's in our toolbox, in fact, and to give you some guidance by way of the tools and the assets that we have available at Standard Life and Finance to support you and your prospective later life lending customers. I do see some familiar names who have joined us this morning, but for those that aren't aware of who I am, my name is Sanjay Gadhia and I'm Head of Sales at Standard Life and Finance. I'd really like to keep this a really fluid and open conversation and session, if I may. So if you have any questions or queries or feedback, even whilst I'm going through some of the content and assets that are available, please don't hesitate to just sort of take yourself off mute or raise your hand, or we actually have a Q&A inbox too if you're familiar with Teams and you'd like to drop your questions in there. So just a bit of a background really in terms of the series of clinics that we've run. So this is the first time Standard Life and Finance have run these sessions of clinics, and it started circa 5-6 weeks ago, where we wanted to take the advisors, either who have registered or not registered with us, onto a journey by way of a series of sessions, and we're intending on doing something similar next year. So we gave in our first session an insight and an overview about Standard Life and Finance, what our proposition is and our service, and how ultimately we can support you and, more crucially, your customer, and ensure that we're continuing to support you by enabling you to give positive customer outcomes. The second session was followed. We actually added in an external guest to join us, a gentleman called Philip Calvert, and he was on hand to support with some lead generation ideas and sessions. And for those that did attend that session, it was fantastic, great engagement, and the feedback we had was that it was a really popular event. As such, we are actually looking to do another event with Phil Calvert in the new year. So please keep a lookout for when that hits diaries in 2025. And if you imagine, we sort of thought, right, let's take you to who we are. Let's support you with lead gen. The third session was actually meeting one of our underwriters, Pat Lease, and he talked through what we actually do and how to translate the valuations, the sort of things we're looking out for, and the pitfalls in terms of the information we require before we can get your customers' application to offer. Last week, we were joined by our case owners team. They are responsible for supporting all applications from post offer and getting it over the line to completion. So Helen Hacking, who is our team leader in that department, as well as David Burns, who is a representative from Enact. They are our conveyancers. They had a really strong, engaging session too last week. And finally, we're here to talk you through our marketing support and tools. So I'm just going to share my screen and take you onto our website. Hopefully that's appearing on screen very shortly. So www.standardlifehomefinance.co.uk is your home for all things Standard Life and Finance when you have any later life queries. So for example, I'm just going to say I am an advisor. I'm hoping you would say the same too. But within this website, you will be able to log on to our portal Connect. That's where you can jump on to obtain any KFIs and put any portal notes on for any applications that are ongoing, and crucially submit those applications too. Just to inform you a bit about Connect, if you're not already aware, and I'm just again familiar with some of the individuals that have joined, and I know you've already supported us at least this year, but our Connect portal is available for you 24/7. It's web-based. Our KFIs and our applications are all paperless and signatureless too. In fact, just furthermore, when you get to a position where you have submitted an application to us, we actually have our online ID checks carried out. So there's no initial requirement for any formal identification or manual identification from yourselves. And we instantly instruct our valuers eServe, who will consequently go out there and contact your customers to arrange a valuation. But let's move on now to some of the tools that we have available online to support you and your customers too. So within here on the ribbon at the top, if you select tools to help you, we are continuously involving the sort of assets and the tools available to you and your customers. And the ones I'm going to focus on today, in fact, are all about the partial repayment calculator and the voluntary repayment calculator too. So the loan to value calculator is available. I appreciate that you probably have sourcing platforms that will support you and guide you with regards to which lenders are the most appropriate by way of rate, cost of borrowing, features, etc., dependent on your individual customer's circumstances. However, if you'd like something specific, we would this loan to value calculator will give you sort of a low, medium, and high LTVs based on a couple of inputs that you would put in for that particular customer. But I guess the reason why I'm focusing on the repayment element is to really focus on what's happened post Consumer Duty and the FCA review that happened not so long ago when they put a spotlight on our industry. And one thing we know post review is the fact that they were very keen to understand and ensure that we as an industry are ensuring that we are supporting that end consumer with education and information by way of the impact of making repayments and what happens to the initial loan if the customer either has no ability or option to make any form of repayments, but crucially they understand the impact of that roll-up effect. So within the partial repayment calculator, it's really quick and easy to support you and your customers. A few inputs will require from yourselves, and this will do, I imagine, if you are sort of face to face with your customers, is sort of bring it to life by way of some visuals, and that's what we're certainly keen to do. Um, Notwithstanding the fact that you'll have the official KFI document from us that will highlight the total cost of borrowing in a grid and a table, but having alternate methods to visualize it as well as putting it in writing should support that understanding for your customer. So a few inputs required. I'm going to leave these two in as standard. So a customer that's taking out a 50k loan, property value there at 400,000. You can actually slide this loan, the MER loan amount, plus or minus to your liking. But for the purpose of this example, I'm going to state that this loan MER is sitting at 6%. And quite simply, we ask you here to input how much your customer is able to make by way of ad hoc payments on an annual basis. So for ourselves at Standard Life and Finance, your customer can make payments of up to 10% of the initial loan each policy anniversary without incurring any ERCs. Furthermore, if you have customers that want to make repayments on an ad hoc basis, we have a minimum amount of £50. That's the minimum your customer must pay. And we have no cap on the frequency. So in essence, if your customer wishes to set up a standing order and pay us £50 a week, they are in their gift to do so. And we will, of course, allocate that to their account once we receive it. So quite simply here, on a 50k loan, I'm going to say that this customer can afford to make £100 a month payments. Therefore, it's £1,200 per annum. And I'm going to stipulate here that this customer is able to make these payments for a duration of 10 years. What you can do furthermore here at the bottom is actually put some assumptions in by way of whether or not you and your customer believe their property is actually going to either increase or decrease on an annual basis. Now, thankfully, and industry-wide data, not just in later life, but the overall financial services industry is suggesting that property values have been on the increase. We've not seen any decreases year on year. I'm going to be relatively conservative. I think that's the mood I'm in this morning. And I'm just purely going to stipulate that house prices are going to be increasing by 0.5% each year. If you think I'm being too conservative, then please let me know. But what this does very quickly on the right-hand side is it gives you a good overview on a graph basis. So the dark blue line here is showing you what will happen if your customer makes no repayments, and the green line below shows you the impact of that customer making some form of partial repayments. And again, if you are displaying this to your customer whilst you're on any of your face-to-face appointments, what you can do, in fact, is actually hover over this chart and it will show you the impact on that specific year. So in this example here, I'm showing a customer that is able to make payments for a 10-year term. And for example, in year 5, just by hovering over this graph, it will show you what will happen with that £50,000, either with the roll-up impact without making repayments. That loan will accrue to just over £67,400, or in fact, by making those repayments, it's just over £60,000 after year 5. So again, to be able to illustrate that and bring this to life on a year-on-year basis, this particular calculator should support you. And furthermore, if we scroll down slightly here, by tabulating this information for you and your customer too, you'll be able to display exactly what happens to that customer's lifetime mortgage. This shows you the amount owed without repayments, with repayments, and in addition, this is actually showing what happens with the remaining equity with and without making those repayments. And what you will see here, in fact, is for this example, I've informed the tool that this customer can afford to make £100 a month payments back into their lifetime mortgage for the first 10 years. So subsequently, after year 10, what you will see here, in fact, is that it will be true roll up based on the assumed 6% MER rate that I've inputted. Relatively straightforward, but I hope that makes sense in terms of how to guide you through using this particular tool. If you have any questions or queries, then please do field them either in the chat or raise your hand or take yourself off mic. I just want to take you to one more tool that we've got here. This is your voluntary repayment calculator. This is slightly more in depth and it asks for a few more inputs about you or your customer's lifetime mortgage and more around what they might be doing in the future. So first and foremost, we like a bit of detail about the customer. So for this example here, we're looking at the customer's age initially. And if it's a joint application, understandably, we'd need the youngest applicant's age. So I'm just going to slide that up to, say, 70. We're going to say that the customer or the youngest applicant is a 70-year-old. I'm going to assume that their property value is £500,000. And why not just say it's a couple? So again, a couple of inputs on the first screen. We're then going to start asking you more information about your customer's loan and the rate. So this is here to start building the outputs from this partial repayment calculator. So the customer has a property of £500,000. I'm going to say here that this the initial loan amount is going to be £75,000. I wished we had an MER rate today, November 24, of 4%. We're not quite there yet. So I'm just going to assume that this MER rate here again is 6%. And in this example here, I'm going to assume that future house values become optimistic between the first tool and the second. So I'm going to assume, in fact, that there is a year-on-year increase of the property value of 1%. So once hit next, this is now asking you details about the repayments. And in fact, you can add more repayment periods in here if your customer is dropping in and out or they have incomes for certain durations throughout the existence of their lifetime mortgage plan. So for example, this is first asking you about the first repayment period. So I'm going to stipulate here that for the first 5 years, this customer is able to pay back £150 per month. And they will be paying, that will be their customer amount. What you can do here indeed is in fact add a second repayment period. So if the customer is making payments on an ad hoc basis, but they know that they're coming through some levels of income in the future, then you can add many iterations, should I say, of repayment periods. And ultimately, you can then select whether or not it'll be the interest, the maximum, which will take them to the up to 10% of the initial loan without incurring any ERCs, or as I've inputted in that first period, a custom amount. Let's just default it back. And now, again, this is slightly more in depth, but what this is now asking you, in fact, is to say, what is the impact of your customer actually accessing their reserve? Now, we have to make some assumptions on this tool, so it is purely indicative. But what this tool is enabling you to see is how much of a reserve facility this customer can have. This is calculated in the background based on the property value and that applicant age that you put in on the first screen. So this example here, we're showing that your customer has an additional reserve facility per se of £98,750. And through discussions with your customer, you can ask them, and again, this is assumptive because through later life, we appreciate that customers will go through peaks and troughs dependent on potential life events or events that just may occur to them in the future. But what you can input here, in fact, is right, is your customer going to be, or A, do they have a drawdown facility? And if so, when in the future do they believe they might be accessing it? So for the purpose of this example, I want to stipulate this customer is going to access their reserve facility in year 5. Now, as I mentioned earlier, this is based on assumptions. So we have to make some assumptions to ensure that this calculator gives you and your customer some guidance and indicative information by way of the impact of making repayments and accessing their reserve facility. So we're assuming the property value is as what we've inputted on the first page, and that the aging of rate is again as we've inputted on the first page too. So from year 5, I'm going to stipulate that this customer is going to need to access their reserve, and they're going to need £25,000. Quite simply here, we're hitting the results page, and what this is showing you and your customer is, again, being able to hover over the graph, what is happening to the retained equity, what happens with and without those partial repayments, and you can see the step up here once you go through and the customer accesses their reserve facility too. So again, on a year-on-year basis, if you and your customer wish to have these conversations, or more so, their beneficiaries may be involved as part of these conversations, you can quite simply guide them and navigate them, albeit indicative. It should give them a really good idea in terms of what happens in the future when the customers are making repayments to their lifetime mortgage. Furthermore, what we are doing here, not only giving you that illustrative graph view, but also tabularizing this to again ensure that you and your customers have two methods of being able to understand, and for you more crucially as advisors, giving them two options by way of understanding or obtaining and digesting the information. It's very important for customers to understand not just necessarily what a lifetime mortgage can do for their immediate financial needs, but the impact it could potentially have on their future cash flows. And lastly, what we allow you to do via this tool is print this report out. So simply hit print report. It's working its magic behind the scenes. And I'm hoping my screen share is showing you the output of the printed report. Not sure if I've shared a specific screen or my web page altogether. Just wondering if someone can share. Can someone see a first page that shows printed report, retained equity and repayments calculator?
Yes, we can see that.
Yes.
Fantastic. Thank you so much. I appreciate that. So again, this is in essence just really outputting this. So if you wish to do this work whilst you're at home pre-appointment, and then take this handout or save this guide or PDF to take with you to your appointment, you can do. But in effect, it is summarizing all the inputs that you've inputted initially onto this tool. So as mentioned here, summarizing the age, the property value, the loan amount, the rate as well, the assumptions that you've made by way of property value increases. And again, this is pretty much does what it says on the tin, but in effect, it's summarizing on a PDF that you could really leave with your customer, but crucially, it is indicative, and we must make sure that you inform this to your customer, because there have been some assumptions made by way of future drawdown releases, what rates have been applied for ourselves at Standard Life and Finance. If your customer was to access the reserve facility in the future, it is prevailing rate at that point in time. So again, there are some assumptions to be made here, but I'm hoping that this tool is another bit of a kit that you can add to the rest of the resource you have available to you. Something that you can walk in with and show your customer how this is going to any impacts the payments and accessing the reserve facility is going to have, not just for today and their instant decision by way of taking a lifetime mortgage, but what furthermore and crucially, what it's going to have by way of the roll-up effect and what it will do with the remaining equity in the property for the estate and beneficiaries. Right, there it is all there. I'm just going to pause for a moment and just ask the floor if you have any questions or queries at this moment in time. Fantastic. I've either done a sterling job or I've put you all to sleep at 10 a.m. this morning, but I'm going to assume the former, not the latter. So that's an insight in terms of the tools that we have available, but we don't just stop there. Again, as I mentioned at the outset, we are constantly evolving our website to be a real resource pool to support you and your customers when you are taking them through a Standard Life Home Finance lifetime mortgage. So not only do we have these tools to help you where you can access those calculators that I've just mentioned, but within our advisor zone, we've got more collateral and assets to support you and your customers. So within advisor zone, again, just one across on the ribbon at the top. So we've got guides and assets here by way of case studies that will talk you through. Furthermore, how small repayments can have a big impact. And we give you some examples and case studies by way of Even making a repayment of £50 or £100 a month, what can that do for your customer's lifetime mortgage? And how can they mitigate the impact of that roll-up effect? We've carried out some case studies, as you can see here. We collaborated with our advisor community. One advisor was very willing to support us where they went through a standard life and finance lifetime mortgage. And the case study discusses the impact on inheritance tax, which is very prevalent right now. I'm still getting information from the paints and the press around the impact post-budget. And I know IHT is something that's certainly in focus and in consultation with respect to pension funds being considered as being form part of any IHT liability in the near future. But again, you can delve into how we've supported customers from an IHT perspective, how that's played out in a specific real life case study. Earlier this year, we actually launched our Horizon Interest Reward Plan. That has gone phenomenally well, not just from ourselves and the advisor community or the customers, but the regulator, in fact, has really welcomed the fact that we have brought this latest enhancement as part of our proposition. But just again, what we've done here is created a further case study to support you and your customer by way of how has an interest serve plan helped this particular customer? How can it help prospective customers of yours in the future? Lots of case studies that we're continually evolving. There was a lead gen webinar that we've carried out too, reasons by way of how our Horizon range can support your customers. And through speaking to advisors more recently, the tail off of this current calendar year, some advisors are sort of taking stock by way of what are my plans and my objectives for next year? How can I re-engage my networks of referral partners? How can I continue to ensure that I maintain a consistent level of prospective lifetime mortgage customers? So again, please tap into that on-demand lead generation webinar. As I mentioned earlier, the one we had more recently with Philip Calvert, that's soon going to be available on demand as well. And if you are tech savvy, then we've got some real good hints and tips to support you with getting noticed online, how you can support with using social media, utilizing some free Google tools, looking at search engine optimization as well. And again, these are all downloadable, free for you to obtain, and just to give you a bit more insight to support you and your customers. But if you'd like us to sort of expand on any of these assets available to you, then we have account managers and business development managers on hand, dedicated points of contact for you. And we're very happy to take you through these on a one-on-one basis. So that's your business support on the advisor zone section. We've got some advisor guides here too. And again, we're expanding on this. But the interest served space is growing. We've seen some new lenders enter this space quite recently. And I'll put my hat on the fact that I am very confident more lenders will be joining the interest served space next year as well. I guess what I'm talking about this is we've got a good product comparison that puts us against a really nice visual to show how our Horizon Interest Reward Plan stacks up against the others in the market. We discuss and compare what the ERCs look like, the options by way of how much your customers can make by way of the interest served payments, whether or not they can make partial repayments too. If you're using Air as a sourcing platform, we've got a guide to show you how you can actually access these interest served plans. And furthermore, lots of assets here to assist you and your customers with respect to interest reward, and notwithstanding our Horizon lifetime mortgage range as well. If you need support on accessing our Connect guide portal, as I mentioned earlier, we can take you through this on a downloadable PDF as well. Further advances and supporting you with the application journey. So again, lots more assets here for you to tap into should you wish. And lastly, what I'm going to touch upon, and this is one we're certainly going to be expanding and refreshing going into 2025, is the market insights. So the reason I wanted to bring you all to this particular section of our website today is I recently attended the Extra Release Council Summit up in the north in Sheffield earlier this week. And through talking through just sort of networking sessions with some advisors and being part of some of the presentations that were taking part, not just by ourselves, but with other lenders in the space, there was some very data-rich content available. Really what that does is give you some information by way of how many customers were single versus joint. Our light bulb moment report here went down an absolute storm. The Equity Release Council, in fact, were real advocates, so they were really keen to see the insights that we gleaned when we published this report, where we actually take you through what happens on customers dependent on their gender. How are they feeling before you've even visited them? What sort of research are they carrying out? What are their concerns? And we've got some real data-rich content here. Again, furthermore, it's just to simply support you and either your prospective lifetime mortgage customers, where you may be considering a Standard Life and Finance lifetime mortgage, or in addition, it's to support you with your network of introducer referrals partners. So please do take a moment to have a look at this. And again, I've got my amazing marketing colleague, Jenna Nixon, online as well. We really want to take your feedback on board. So if you've got any considerations on assets that you'd like to see from Standard Life and Finance, please do let us know. If there's any other tools that you'd like us to present to you all, again, please bring that forward. We will not take anything off of the table. Ultimately, you are advisors, and we want to support you as much as we possibly can. The last thing I wanted to guide you towards really is just about our lifetime mortgages. In fact, there's two more things. So within this section here, our lifetime mortgages, I'm just going to click on our lifetime mortgage range as opposed to interest reward. But what we do here is give you a good summary, high level in terms of how we can support you and your customers. Loan amounts, our product perimeters are available on here. But I just really wanted to direct you to the right-hand side of this particular section. So advisor and product guides are available. If it's post-completion, you will have access to the tariff of charges if your customers wish to access a further advance, for instance. We've got the guide to our Connect portal available here. And we often get asked about our fair value assessment or our target market documentation too. This was something that we had to publish post-consumer duty. But again, these documents are available, fully transparent for you and your customers. And again, all accessible online via this particular section. Again, just further down here, we've got some more options and information about the features available, and we've got some nice easy links into the calculators that I just walked through with you. And lastly, really, I just want to focus on any customers that you may have in place, or if you're considering our lifetime mortgages, what can your customers do once they've completed? So by all means, what you can do is direct them to our customer-facing part of Standard Life and Finance's website. So we have here, in fact, once I click on support for existing customers, a lot of collateral to support them post-completion. Naturally, I know you're going to be available for your customers, not just at point of going through the advice process for their initial advance or the initial loan, but I know you are continually on hand for them to support them with any inquiries they have post-completion. But again, please do direct them to this section here. We've got lots of customer facing guides, again, written in the language that we know we need to for customers, but it gives them information in terms of how they can access further funds, what happens if they have a change in circumstances. So, for example, if an applicant has sadly passed away, moved into care, if the customers are looking to move house, potentially port, this information and guides are all available for your end customer too. Then furthermore, this gleans into more information about making repayments, if they're in a position where they want to redeem their loan, or just want to have some customer guides about us and our proposition. I'm going to take a second pause there if I may. I'm just going to stop sharing screen for a moment. Okay, so I hope that's given you a bit of insight in terms of the tools and assets and guides available from our specific website to support you with your prospective lifetime mortgage customers, any current and existing lifetime mortgage customers post completion. And also, I sort of touched upon some of the guides and assets we've got available by way of lead gen webinars that we've already hosted, and hints and tips by way of your online presence and utilizing some of the free tools that are available via search engines such as Google. I'm going to pause once more and just ask if there are any more questions. or queries or feedback even?
Sanjay, it's more feedback.
Sure.
So I was trying to source on air for your interest
Uh-huh.
reward product, and the customer said to me that he wanted to pay 100% of the interest for a maximum of 5 years because he was going to be working
Sure.
for the next 5 years, and then after that he wasn't sure what was going to happen. When
Uh-huh.
I put those parameters into air sourcing, unfortunately, it showed, and he wanted to pay 100% of the interest. So 100% of the interest, 5 years, and I put those sort of parameters into the sourcing, and then the results showed your 5 year products 25, 75, 50%, 75%, 100%,
Uh-huh.
10-year, all four iterations, 15-year payment periods, all four iterations. And it took me hours to try and
Right.
filter all of those products out to just show the one I wanted, which was 5 years, 100% interest payments. I'd been on your website, I knew what the rates were, I knew what the discount was, etc. So I knew what product I was looking for, but air sourcing was not playing with me. And I fed this back to air about 3 times now, and they say they're looking into it. Do you know if there's any sort of developments coming as far as air catching up with all of this?
Yeah, that absolutely is, Darren. It's as if you've got a camera in my home yesterday and today, because it's genuinely, this is exactly what I've been looking at myself. You're not alone by way of that feedback, Darren. And first and foremost, thank you for giving me that honest, open feedback. I guess the only one question I'd like to ask you is, with air sourcing, it does ask you when you select that you want to see the interest served plans, it asks you to input the amount that your customer can make payments, or how much what their non-disposable income is, as you mentioned.
Yes,
Um, it also asks, and that's a mandatory field, the payment amount is, but there is another field just beneath it to select how long that customer wishes to make payments for.
yes,
Did you input 5 years on that one as well, Darren?
yes.
Okay. I would love to get that example to support me with what I'll be putting forward to air in the next 24 to 48 hours. But you're absolutely right. We are that there is a slight challenge, and you're not the only one by way of reviewing the outputs from air sourcing. We are just looking at into that with air to ensure that we're making that advisor journey from you on a sourcing platform basis as smooth as possible. But going back to what you were saying there, if you knew the specifics for your customer, which you did in this instance, fully respect that you need to get the sourcing information by way of for your compliance and for your file to show that you've honed into the right solution for your customer. But with those two inputs, you can absolutely go onto our portal direct and obtain said KFI on those specifics, because I know we allow you to actually stipulate that put that sort of granular information in to get the KFI and the impact thereafter. But Darren, in short, fully welcome that feedback. Very aware of it, only as of yesterday, with some of the feedback that was coming in from head office as well, and working with Air today and tomorrow to get some fixes in place to bring that out. If it's okay with you, Darren, I might contact you post webinar today just to get some more information, if that's okay.
Absolutely. Yep, thank you.
Thank you. I appreciate you telling me. Okay, is there any more for any more?
San,
Mike?
yeah, when I'm looking at the rates, basically, and it's not all about rates, but when we go for the interest reward,
Mhm.
usually I'm finding whatever amount that I'm putting in, I'm still paying a higher rate, even with the interest reward. I'm just trying to find. I must be putting the wrong amounts in. I've got to find the right amount one day, but it's not all about that. Obviously, day one, 8 years, etc., will come into it. So yeah, or alternatively, if it is going to be that rate and it comes lower, then
Mhm.
we're in the 995 region, which others don't have. So yeah,
Correct. Yeah, Mike, I think what you're mentioning there, in fact, is the fact that if you're looking at a traditional lifetime mortgage, even one of our own, and trying to compare that to the Horizon Interest Reward Plan, where your customer will obtain a discount by making those interest payments, I think if I've understood correctly, in fact, you are getting an output for a traditional lifetime mortgage, which has a cheaper rate compared to an interest serve plan.
yeah,
Yeah. So in that, very aware of this, Mike. In fact, so how it may have played out is the fact that our Horizon loan to value shelves start from the naming convention of Horizon 200 and can go as high as 650, and there are several layers in between, and they go up in numerics. Now, our Horizon interest reward plans, the interest served proposition, that starts from Horizon 300. So that will naturally be a higher rate from the 200 starting point. Now, what could be happening, Mike, in this instance is that the loan to value that your customer needs can be achieved on one of our one of our more traditional lifetime mortgages, which is not an interest served plan. So therefore, what we'll be doing is we'll be saying we appreciate and acknowledge that your customer might have the ability to make repayments, but in fact, Mike, that even with the discount included, our traditional lifetime mortgage is giving your customer the loan they need on a cheaper rate. And let's not forget that they can still use those 10% ad hoc
10%.
voluntary repayments. Absolutely. So I think it is. I don't believe the outputs for that is incorrect, but it will be very dependent on that loan to value. So if you have a relatively low loan to value, should I say, you will naturally start seeing some of our more traditional lifetime mortgages appearing as a lot cheaper or significantly or even relatively cheaper compared to the interest served plans.
Yeah. Thank you.
I appreciate you calling that out there. Thanks, Mike. Whilst I'm here, I know this was dedicated to talking you through what's in our toolbox and the tools and assets that we have available for you all on our website. But if you've got any other generic questions about Standard Life and finance, anything about our features, products, proposition, criteria, then I can fill them now. But I'm not one to sort of keep you on if there's nothing more to discuss. So I will give it a few more moments. And if not, I will wish you all a pleasant day and